There seems to be a lot of confusion out there surrounding cash balance plans and their contribution limits on a year-to-year basis. So in this video, I am hoping to clear some of that up and explain a little bit about what cash balance plans are, why they're effective, and how you can max out your contribution limits, what those really are. Cash balance plans are a qualified retirement plan that you can establish in your business. They work really, really well if you already have a 401k plan, but you want to put more money away tax deferred for your own retirement. It's kind of a split between a defined benefit and a defined contribution plan. When you establish the plan, you agree to put in a certain percentage of each employee's compensation into an account on their behalf, and you guarantee that those contributions are going to grow by a specific rate every single year. Usually it's set at 5%. So what that means is if it's only you and two other employees, all three of you make $100,000 a year, and you set the plan up to contribute 2% of everybody's compensation, then you're committing yourself to making a $2,000 contribution per employee every single year. So in year one, you put $6,000 into the plan. The plan says that those balances will grow at 5% per year. So if you invest the funds and then they grow at 8% per year, that means that you're a little bit ahead of schedule and you won't need to put as much in the following year. But if you invest in a bunch of risky stuff in the plan and the value of that $6,000 falls because the market crashes, maybe it gets cut in half, falls to $3,000, well then in year two you have to make up those losses with an additional contribution plus the growth. And there's a little bit of flexibility around that your administrator can help you with. Now, what are the contribution limits? I mentioned 2% of compensation. The limit in a cash balance plan is like an annuity. It's like a defined benefit plan. And the IRS has a maximum size to which these things can grow. In 2023, the largest that a cash balance plan can grow, the largest size it can grow to is $3.4 million. So the IRS has all these complicated calculations and annuity tables that you can use, or that your administrator who helps you set this up can use to determine the most that you can put in every single year. And it's based on your age, because if you're 50 and you're starting one of these things, you have a lot longer until you get to retirement age and a lot longer to reach that lifetime maximum than if you're starting it at age 60. You have 10 years fewer, therefore you can put more money away on a year-to-year basis. Now, I mentioned that the contributions are a percentage of everybody's compensation. You can actually create different classes of employees. You can have ownership or management and then everybody else, and have a different compensation mechanism for different classes of employees. We had a client recently who's going to contribute, she set up a plan. She's going to contribute 2 or 3% of all the other employees' compensation. I think she has 8 employees. She's going to put in 150 grand for herself. And so for management and ownership, you can set it to be a flat dollar amount every single year or a percentage of your compensation. But the limits surrounding how much you can put in are defined by the IRS's lifetime maximums, which go up a little bit every single year. At the end of the day, however you draw it up, if you're someone who already has a 401k plan, you're maxing out your contributions, but you want to save more for your own retirement, which gives you a deduction for every dollar that you put into the plan. So it's a great tax planning maneuver in a lot of circumstances. If you're someone who wants to juice your own retirement savings, put more in on a tax deductible basis, this could be a great fit for you. And you have a lot of flexibility surrounding how it's set up. In any case, you'll definitely need an administrator to help you create the plan, maintain the plan documentation, make sure that everything that's going on in the plan is done in concert with the plan document, and that everything is street legal in the eyes of the IRS and the Department of Labor. Even after the cost of hiring someone to do that, this is a great tax planning mechanism for a lot of profitable businesses, and it's something you should probably consider. So contribution limits are great. Like I mentioned, it depends on your age. Lifetime max of 3.4 million. I think the maximum annual contribution you can make if you're 70 years old is just below $400,000 a year right now. If you're younger, if you're 60, it's probably half that, I would guess. But your administrator can help you around the margins there and figure out all the details. All right, hope this was helpful. Talk to you all again soon.